Where is it going to reach for? Where's the liquidity at? And when you see it like that, it's just fingerprint. That's all I'm showing you is that these things repeat because it's coded. It's written this way. And you see enough of it now to know that it's beyond coincidence. And it's something that you can do yourself. You can wait for these instances to see price do certain things to tip its hand to you, and you wait, just like smart money does. It waits for the market to tip its hand. It's not waiting for patterns to form. It's not waiting for indicators and averages to cross over. All that stuff is the opposite of what you're supposed to be looking at. You're waiting for a certain time of day of week, economic calendar, operating times, New York session morning, New York session afternoon, London session. And you're waiting for the market to tip its hand on where it wants to go. That's the draw on liquidity. But every single day, folks, listen, every single day, the market gravitates to buy side liquidity or sell side liquidity. And before it gets there, there is a fair value gap. That's always there. It's always there, folks. It's never going to be hidden from you. They're never going to fucking change the algorithm and remove that. Okay? It's not going to happen. That's not going to happen. There's always going to be people out there placing stop loss orders to get in or to get out of a trade. That's liquidity. That's necessary. That's fundamental to how markets are booked. You need another counterparty. And thankfully, just like P.T. Barnum said, there's a sucker born every 2 seconds. So it may not have been 2 seconds, maybe every minute. But the point is, there's suckers born all the time that want to come in here with their retail bullshit, harmonic patterns, Elliott wave horse shit, yin and yangs on their chart. All that stuff is a reason for them to do what? Push a button. That's the instigation, the 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 cause for them to do it. And the effect of that result sometimes is lacking. You have been conditioned to anticipate precision. That's where your pursuit is. You're not trying to be someone that pursues being right. Because at some point, being right is going to no longer be enough. So what do you do to satisfy when you're right more times than you're not? How do you stay satisfied? You pursue excellence, excellence in execution, excellence in precision, excellence in managing risk. You refine your craft to be razor sharp, always at the ready, dialed in. That is the pursuit. That is not, I got to be right. I got to be right. When you do everything correctly through your model, the output that you get from that will be easily referred to in hindsight as you did that right. Notice the difference there? You're pursuing something else as the goal. But by doing that, you get what it is that you're trying to do initially as a new trader given to you. You get it as the result. But your pursuit is not to be right. Your pursuit is to follow the model, the logic, the plan, price action, studying what it is that you're doing, and waiting for any kind of input through your watching of price or the experience factor that the analyst is going to come welling up inside of you, speaking to you through your conscience, saying, okay, we're in troubled waters. Okay, I'm feeling a little disoriented right now. I feel that this trade is questionable now. So I'm not going to sit here and waste any time, develop a panic attack. I'm not going to waste mental capital because there might be another opportunity. And if you're bogged down with this, you won't be able to see it. So how do you do it? Half the trade off. And if I can't do half, kill it. Done. spend 10 minutes doing something else. How hard is that? It's going to feel impossible when you're in it. But you got to remember this lecture now. This is it. This is the standard operating procedure. This is your SOP when the shit hits the fan and you are now in troubled waters and you have lost the plot about the trade. You don't even know what you're supposed to be doing. Stop loss is a problem. The target's a problem. Holding is a problem. You don't want to get out. You don't know what to do. You're like a sailboat out in the ocean with no rudder, wherever the wind takes you. And that could be scary. And it's justified for you if you lose sight of what it is you're doing and you're disoriented for you to feel that way. So the way you gain control, remove risk, half the position taken off, and leave the charts. Minimum 10 minutes. And I promise you, you'll be able to walk back with a fresh perspective and you're not going to be disoriented. And you might see something in the chart that says, you know what? Everything's okay. And if you get another fair value gap or something else that gets you in to add another partial, you can put back on the part that you just took off. Now, see what I just walked you through? I walked you through how to manage yourself psychologically and emotionally in a time when you will experience this with real money. I promise you, you trade long enough, you're going to have this occur in your trades. The problem is if you have it frequently occurring or manifesting, you are over leveraging. That's the clearest indication that you're using too much size. If it's hard for you to hold a trade and you're questioning whether you should get out, that is always a factor with over leveraging. So dial it back, go down one size less. And if you still feel that way, go down one size less until you find that sweet spot. In that sweet spot where you put a trade on, you don't care. It might be 2 contracts for ES, it might be just one. And you can build a career on just that. You don't need to build it bigger than that. But once you understand how to pyramid, you can start with one contract. And every time it gives you an opportunity to enter, but not so close to your original entry that it makes it difficult, you can, like for instance, say you want to sell short the ES. You sell short at 4,000, hypothetically, and it drops down, it pulls back into a fair value gap that's still bearish at 39.96. Okay, you can sell short one more there. It breaks down, goes into 87, comes back up to 90 into a fair value gap or a bearish breaker. You can add one more there. You're still trading one contract, but every one of these new pyramid entries is a trade in and of itself. And you gradually build up that way, but you're still a one contract trader. You're just adding more incrementally, one contract at a time. That's called pillaring, where you're just adding one to the original position, one, whereas a pyramid is you put your biggest position on first, reduce it, your next entry would be on that, and then reduce that size and then take the next trade. That's a pyramid. That's how you see me do 6 contracts, 3 contracts, 1, and I'm at 10 lot. That's like my bread and butter go to. That's the thing I'm reaching for. That's why 99% of the trade executions you see me doing that. Is it advantageous to do it any other way? It's just something that's just me. I can do less, I can do more. I like to have 500 hours per point, and 10 contracts on mini will get you there. But you can go in scaling in with 6, 3, and then 1. And every time I'm adding less while there's profit behind that one. So even if it moves against me, it's not a huge compounded loss. And to understand what I'm saying is if you just go look at my examples I have on Twitter and the few I have on my YouTube channel, when I'm showing you pyramided position building, that is based on I already have equity in the trade, and I'm not going to risk that equity to a point where it's going to make me a larger loss if it goes against me once I have my full position on. you'll learn all that stuff. We'll be doing all that stuff in the summertime, teaching you how to build pyramids and scaling in and stuff like that. But I'm not sure where I got this idea. Kind of like it was on a whim tonight to talk about all this, and I hope it was helpful to you. You know, maybe if not anything else, maybe it was a little bit entertaining. But the things I mentioned in here are real world experiences. I went through it myself, and as a 20-year-old, you tend to think that you know everything when you don't know shit. And I had that moment before, whereas I know a little bit more than the average bear now, but then I really believed I knew everything. I didn't know anything. So when I got these points of panic, because I readily recognized that I was in over my head, I was doing trades that I shouldn't have been taking and building up as big as I was doing it. And I wrestled with the whole time I was in the trade. And I couldn't tell you what the price was, even though I was looking at the chart. That's how disoriented I was. And that can happen to you if you're over leveraging. You lose completely every frame of focus, all sound logic, everything completely. It's like you're drunk. And I've never been drunk in my life. But that's what it felt like, you know, looking back and thinking about. Like, I was not in the right state of mind. I had no idea what I was doing. And if anybody was to sit down and grab me by my arm and say, "Hey, Michael, listen, this is you need to get out of the trade," I wouldn't I wouldn't take the advice. Like, I was completely underwater, drowning, but foolishly keeping my head under the water myself. And that's what you do when you blow your account. You do that. Or it's gambler's numbness, where you just sit there and you press the button. Remember the analogy I used when I went to my first year wedding anniversary, and I was trying just to lose the $100. I just wanted to lose it, to be done with it. I could have just said, you know what, I lost $80, $90. I'll put the $10 in my pocket and I'll just grab an ice cream or something with my wife, and there it is. That would have been a better decision. But it doesn't feel like a better decision when you're there, because now you're pursuing something, and you don't want your pursuit to be about being right. So hopefully you found something useful in this one tonight. Hopefully I've given you something to work with in terms of managing the psychological demands that we place on ourselves as traders, and when we end up in these deep waters. So I'll talk to you next time. I won't be doing a Twitter space tomorrow, obviously. I did one here tonight. I'm going to enjoy my weekend with my kids and my wife. And I'll be back at it again next Monday, Lord willing. Until I talk to you then, enjoy your weekend. Be safe.